8 months ago, I did a video on why Michael Burry bought GEO stock, and I mentioned I would interested in buying the stock if it ever goes to the $5 range. Well, finally, after 6 months of me having GEO on my watch list and looking at it and seeing it go from $6 to $10, back to 6, up to 10, we finally got the $5 range, and I opened a position in GEO. My cost base is around 555 is a small position, and now the stock is $5.70 per share. So I'm gonna really talk about more of an update on GEO, what has really changed, and why I decided to buy right now, when the main thing of why the stock actually dipped so much. If you could see, it was trading pretty close to $10 a share and to $5.55. That's a pretty big move in a short amount of time. Now, first, if you're not familiar with GEO, they actually own and operate kind of a private prisons. And I know some of you might have a moral hazard on that stuff, but a lot of people do. And this is Michael Burry's kind of investment philosophy, is the ick investing, something you get an ick whenever you see it, like maybe a funeral home business, maybe like a private prison business, maybe like a firearms business, something people don't really want to touch, or something that takes a lot of calculations and is very, very complicated, because this is where Mr. Market makes a mistake, and then you buy onto this mistake, and then you sell whenever Mr. Market realizes the value. So GEO owns a lot of those prisons, not just in the United States, but actually around the world, in South Africa, Australia, and United Kingdom. And they basically more specialize in actually rehabilitation. They help rehabilitate the people in those jails and prisons, which is something really good for society and for those inmates. Something they don't really do too much in those public prisons, but GEO specialize in that into private prisons. So there's two main things that contributed to the down move in GEO stock. The first one, as you guys know, GEO used to be a REIT, or it was a REIT before. It used to pay a dividend and everything, but now they changed their structure from a REIT to a C Corp. And this has kind of put a downward move on the stock. They had to pay a lot of fees, and many people didn't really understand why they actually did that. Will that benefit them in any way? But actually, the CEO on the earnings call, he said that switching to a C Corp is actually going to help more into the refinancing of their debt. And the second and biggest problem, of course, with GEO is the debt. And the debt is maturing very, very soon. Over $1.9 billion of debt maturing very, very soon. Now, if you looked at GEO, you may tell me, but who cares about the debt, right? It's trading at a price to book of 0.70, less than 1. That means I'm buying for 70 cents on the dollar. But this is a big trap for most investors, and you shouldn't think about the stock like that. Book value on book, they could mean a lot of things, okay? There could be a lot of things on the book. Now, on the books, if you actually look at the balance sheets, they have over $2 billion in properties and equipment, so over $2 billion in those prisons adjusted on depreciation, okay? But actually, if you watch my previous video, they have more like 3.5 to 4 billion of properties and equipment, because they were able to sell what they had on book for more than twice and 3 times their value. So the book is very wrong over here in the properties and equipment, especially with inflation, everything we have. Those prisons are worth way, way more than they have them written on book. Now, this is a good mistake if you have it written on book. The second one, if you look, this is the biggest one that investors fall for. This is intangible assets, okay? So the goodwill, they have on goodwill 921 million. Now that's that's a lot to have a goodwill for a company like GEO. This is not Apple or Microsoft or any kind of Amazon or any kind of big name. For GEO, really, it should be, maybe 1,500,000. So for me, I would count that as zero. I wouldn't even count it, because if the company does go bankrupt, they cannot really sell that goodwill. I mean, I don't think they can really sell the goodwill. So for me, I count this at zero. Okay. Now, if we go down to the debt, see how much debt they have. They have over 2.6 billion in long-term debt. Now, this is only a $600 million company, over 2.6 billion in debt. Okay, they have some non-recourse debt. Total debt is around 3 billion. If you look at shareholders' equities, this is around 975 million. Now, you may say, this is amazing. This is even more than their market cap. And this is the trick on the book value. But as we looked, they have an intangibles around 921 million. So if you take that to zero, the shareholders' equity is only $60 million. So it's trading, maybe if you look at the book, it's not even going to be under $1. lifetime book. So as you can see, this is a big trap. But as I told you before, the assets they have, which is the prisons, now with inflation and much more, as I showed in my previous video, which I highly encourage you to go and watch it. If you go, you could go for yourself. If you go on the annual report, you look for how much they have the prisons on book, and you look at the recent asset sales, they sold them for more than twice, sometimes 3 times what they had them on book. And now with inflation, these prisons are worth much more than they likely had them on book. Now this is the debt with GEO, and this is the biggest problem. Over 19 million is maturing in 2022, 278 million in 2023, and boom, over 1.7 billion is maturing alone in 2024, which could send the stock into bankruptcy, okay? And there's 2 scenarios here, with the main reason why the stock is depressed so much. The first kind of, things they could really do is sell their assets, combine it with the cash flow, and try to pay off the debt. But in this case, they would have to sell over 50% of their asset. Now, what the company is really trying to do is they don't want to sell much of their asset. What they want to do is they want to refinance the debt on a later date. For example, push it from 2024 to maybe 2031 or after, because the company is cash flow positive, trading only 3 times cash flow. They make around 200 million a year in cash flow. So they can, combine some asset sales, some of their cash flow, some of their cash, which they have over 500 million. And if they can push the debt to a later date, this is going to be amazing for the companies. They can actually pay it off, and then the stock is going to go back up. And this is going to be the main catalyst. But recently, GEO's debt got downgraded to pretty close to junk status. So many people are saying that nobody is going to lend GEO money, and therefore GEO is going to go into bankruptcy. And I'm going to look into both scenarios, the bankruptcy scenario and the scenario if GEO was able to roll out their debt. Okay, now I've been noticing something, not just in this article, but from other people I personally know that were actually short on GEO. This gentleman here on Seeking Alpha, he wrote an article, he was a short on GEO, and he said he covered his short position. He said, given GEO's cash flow profile, a successful restructuring is nearly a certainty. Okay, and this is the same thing that Zoli said, the CEO, because they asked him on the call, they said, why are you holding 500 million in cash? Why aren't you paying off the debt? And he replied that this is what the kind of company is, the restructuring companies that want to kind of lend them money. They want them to have a lot of cash on the balance sheet before they lend them. And GEO is a massive kind of cash flowing machine, over 35% free cash flow yield on the stock right now. So if they didn't have any debt, they can buy back the entire company in only 3 years. But they sadly have a lot of debt. And this is the reason for the 3-time cash flow depressed type of valuation. Okay, but I think, as the CEO said, as a lot of kind of shorts I've been seeing they've been covering, I personally believe, and I don't have really any doubt, with GEO's cash flow machine position and all the properties they have, which the lenders know that now with inflation and everything, those prisons are worth way more than they have them on only 2 billion on the balance sheet, especially now that not many companies want to build prisons. Nobody wants a prison in their backyard. So those prisons are becoming very, very kind of, very kind of valuable. So now let's look at all 3 scenarios. The first scenario is GEO going bankrupt. Now this is something I don't really want to be into, but I'm going to look at it anyway as the worst case scenario. So the worst case scenario, GEO goes bankrupt. And I did have companies that going bankrupt I owned before. I mean, it took some time, years for me to get kind of my money back and stuff. It wasn't really pretty, but I'm going to kind of get that worst case scenario. So this is the worst case scenario, right? Okay. Now, as we looked here, the shareholders' equity is 975 million. But if we take the goodwill, this is practically around 0, okay? I mean, net is around 0. But as I told you and as I showed in my previous video, the property and equipment are at least worth between 3 to 4 billion, because they are worth much more than they have them on the books. So let's assume they are only worth 3 billion. So this here, instead of it being 0, is going to be around 1 billion of shareholders' equity. And if we take 300 million just for us being wrong, for bankruptcy fees, all kinds of stuff, maybe they couldn't get the 3 billion. In total, you're going to get around 700 million, which is basically the whole thing with the market cap. So worst case scenario, you're going to get your money back, okay? This is the worst case scenario. Now, the other case scenarios, there's 2 types of scenarios. Scenario number 1, This is them selling assets to cover this massive pile of debt, which is 1.7 billion. This is the calculation, okay? They have around 500 million in cash right now. Okay, in 3 years, which from now till 2024, they may gonna make 200 million in free cash flow every single year, which equates to 600 million for the 3-year free cash flow. Okay, now by 2024, they're gonna have around 1.1 billion in cash. The total debt due in 2024, which we combine all of those together, is gonna be around 2.2 billion. This would leave us with a net debt of 1.1 billion. Scenario number one, if they sell assets, and let's assume they have the 3 billion in property. Now they're gonna have to sell around 35% of their entire properties for them to get the 1.1 billion. Now if they did that, they got the 1.1 billion, they got rid of this debt. Their new cash flow is gonna be much lower. From 200 million is gonna be around 130 million. And they would have around 900 million of remaining debt, which is not due until very long in the future. And this way the company survive, and then it could get repriced at a much higher multiple. Okay, this is scenario number one. Scenario number two, which I think is more likely, is they can actually roll out the debt. Okay, so they can pay the 900 million in 2024, and then they can roll out the rest. Then if they pay around 600 million in 2026, which is this number, 600 million, and they only pay 900 million in 2024, which they use their cash and everything they have, and then, you know, they roll out the other portion of this debt. If they roll it out, their new cash flow would be around 150 million, because they're going to have much higher interest than they have right now, as their credit got downgraded to pretty much close to junk status. So their new cash flow is going to be around 150 million, and the remaining debt is going to be 1.1 billion due after 2031. And this way the company survive, and then it deserves a much higher multiple than the 3x free cash flow that is trading at right now. Now there's another catalyst that actually people are not paying attention to. The GEO, he actually mentioned on the call that there's 2 new facilities that are going to be being built in Florida, and there's much more facilities that are going to be built in Georgia with assistance from the state. And as we're going to have the run-up in the kind of government, if the Republicans do win the House and the Senate, as a lot of people are expecting, this is going to be bullish for GEO, for the restructuring in GEO, for them kind of trying to open more prison, as they are more private prison friendly kind of administration. This is also going to be a catalyst for GEO. So what am I personally doing with my shares? Okay, as I said, I bought at 555. Now I don't personally want to go into a bankruptcy scenario, but I did analyze it in this video. At the best kind of ace, I can do it in this short video. So for me, what I'm personally doing, I have my shares at 555. It has extremely strong support, as you could see, around close to the $5 range. So I have a stop loss around the $5 range, meaning if it goes under $5, my kind of sale is going to be at $5. I'm willing to take the small loss, and that's it. I don't want to go under $5, as this is a very, very risky investment. Now, if things play as I'm personally saying, and we do get the restructuring of the debt that everybody is expecting, GEO is going to be trading between $8.50 to $10 a share. And this is what I'm personally in for the stock. I'm not in for the very long term, and in for the Mr. Market to realize the values as the mistakes that he made. Okay, so if that goes around $8.50, anything higher than $8.50, I'm gonna start selling, and I'm gonna exit my position between $8.50 and $10 a share. Now, I'm not gonna hold it for the long term, but if they can actually fix their problems for the long term, it could actually have a potential of much higher than 10, maybe $15 to $20 a share, but I don't wanna stay in it this long. So this was my entire kind of video on GEO. I hope you enjoyed it. If you liked it, please press like and maybe consider subscribing. So I hope to see you in another one.